Good evening, everyone. It's Chris from Celsius ATR as well as Excel. You can find us on both websites. X, which is no longer Twitter, it's called X, Instagram, as well as Discord. We use this adaptive algorithm for trading the side market, up market, as well as down market, as well as the reversals from top and bottom. And remember, you can find us on YouTube. The weekly video is for free, offered to you. And at the same time, this is for educational use. We are not a broker dealer. Let's go to the first slide that I have up here. And I had said, has the S&P showing some signs of recovery? After the Thursday candle down here, which we reached the 5520 area, we reversed back up on Friday and we basically consolidated a little bit and continued the first hour to the upside. The most important thing is to understand the first week on February 21st of 2025, this candle here was the first week that we started getting a continuation to the downside. And this is the first Friday as of March 14th. This leg was the first leg up. We cleared the 250 simple moving average. It's in cyan color. The 200 SMA is in white, and I am paying attention in case we consolidate and go back up. If I take the annual high for 2025 from the high of 6147.43 on the SPX, which is the Fortune 500 company, and I will cover the SPY. If we draw a downtrend channel all the way to the bottom on Thursday, that would be a 10.46% decline in the market. On Friday, we rallied up and we continued, but we consolidated end of the day for a couple of hours and just grinded back up, and we sold a little bit off on close. But the most important thing on that reverse from the high to the low, we recovered from the 10.46, we recovered to a minus 8.26, 8.27 on the S&P 500, Fortune 500. The most important thing, we're going to pay attention to Bitcoin, AI, International Fund ACWX. The reason why it doesn't have overlap in US markets, the Fortune 500 company, the NASDAQ, and the small cap, the Russell RTY or the IWM or IWN, the value versus the dollar, the VIX, which is the fear gauge, as well as the bond market in relationship to what the Feds are going to do in the market, if interest rates are going to stay up there or they're going to cut it by a quarter. It looks like they may not, but we got to pay attention to that bond market versus the tariff, which is happening between Canada and Mexico and the US, as well as the European, as well as China. I think it's going to cool off, but we have to pay attention to the interest rates or what the Feds are doing in regarding interest rates and inflation. Let's go to the next slide. Remember to check us out, get in contact with us. We're here to help. And let's go to the first SPY. I put the SPY here, which is the electronically traded fund through spiders for the S&P 500. You can see I'm going to show you how to do the measurements so you can get a drawing tool, which is a line. We take the trend line from the high of 613 to 23 all the way to Thursday low. You can see there was a 10.36 decline in the market. If this is going to be reversing because we consolidated at this area and reversed back up, I was expecting a little bit more down to this area and reverse, but Thursday gave us a sign of a recovery on that run up, fall back down and close right above that area. And you can see the SPY, it had an 8 minus 8.26 from Thursday's low. So this is very important to understand that the SPY is trying to recover. Let's go now to take a look at the Bitcoin. And Bitcoin, I'm putting the micro BTC. We can see in here, if I zoom in, I wanted to zoom in to show you this double top up here. It created like a crab, a rounded, an M pattern. It did like a double, like an inverted W. We were trying to break out. And I called this area here at the 106. I said to everyone, hey, at 106,000, be careful. This is going to dump up. It took a couple of days here in this cycle. And eventually we consolidated for about a week and a half and fell down, tried to rally on basically touching the backside of the channel, went up, retested, fell back down. Now we got this island here. This was a diamond shape. This is an island reversal inside the range of these 5 days, but it's trying to recover. I am paying attention to the backside of the 116 SMA because it will catch up with the backside of the channel and the candle coming up to here in case it does reject the 89,000, 91,000. Pay attention halfway back to create a rounded bottom and eventually break out. That's on BTC. I am not saying it will because we have filled a portion of the gap. If you can see, there was a bigger gap here. We filled it on this wick, but there was still a little portion here left in the gap. This is why I left. I'm no longer going to keep that word gap in here. We're going to remove the text that says gap because it's no longer there. On the charts because it has filled 100% of it by using these two wicks and consolidating inside the 5-day range after looking down, filling the gap, coming back on Tuesday. Wednesday was just an inside day of the Tuesday. Thursday was an inside of the Tuesday. Didn't end up falling below the Monday bar. I mean, this is Monday, Tuesday, Wednesday, Thursday, Friday. Didn't fall below the Tuesday bar on Thursday. Then we rallied back up inside. We're trying to look above. We tested the basically gap here, but we closed inside this range. Pay attention to the profile. While the RSI, if you do a downtrend channel on it, if we do this, you can see that there is a breakup. We're above the 38.2 fib, and even if I make it into a line, edit the property, and I make it into a solid line, and we make it wide so everybody can see it, we can see that we are trying to break up in case we get to the RSI 50% on the charts in Bitcoin. Let's go to the next slide, and I wanted to show the Mega 8. I usually use them as a reference. I think they are in orange. The Mega 8 or the Mega 7 or the Fantastic 7 are part of the NASDAQ 100. It is Apple, Amazon, Alphabet, Google, and Google, Facebook, Meta, Microsoft, Netflix, Nvidia, Tesla. So I included in here myself Netflix because I like the company. I think they're doing a great job, better than Disney. So NVDA, these are the 8 sectors. If you can see, after creating that crab pattern or that triple top up here and consolidating for 2 weeks, we fell very hard. We double bottomed on Tuesday, by Tuesday, Wednesday, and reversed back up on Thursday. But the Friday candle held the 200 SMA. This is very important. It's still inside that 5-day range from Monday until we clear that area, get back to F3. This is going to be a little bit hard, but I am paying attention to that sector in the tech and couple it like AMD, Microsoft, Apple, Google, Netflix, Tesla. I had taken some options on Friday on Google to the upside, looking for a strike higher as well as in Tesla. What I want to do is show you guys Tesla alone by itself. So we're going to uncheck these colors. We're going to put just TSLA. And I wanted to show Tesla for this reason. We had a large consolidation area in this area here. If you can see, there was a gap, this gap here to here. You can see it in here. I'm going to mark it. This 100% of this gap has been filled in Tesla. If I take this low to this area, that high, you can see that Tesla has filled 100% of it and cleared that area. Even if I change the color, let's make it like a purplish color. I wanted to everyone see that it has filled that area and it's trying to recover. If there's going to be continuation in this area, this candle was a down day. Then on Tuesday was look below, come back, close inside. Then it got back halfway, but it closed right here. Then we reversed on Wednesday up. Thursday was a little down day. They brought it back up when it touched here, but it closed right on it. And on Friday, when we looked down to the close on Thursday, we tested it, bounced off, then we continued higher. Very important, I am paying to the backside of this channel in this candle here in case we clear it and continue back up on Tesla. And this is why the reason I wanted to zoom in and show you Tesla on the charts. Let's go take a look at now micro 500, and I will do the small cap as well. So instead of using all this consolidation in this gap that we have here, which we have cleared, we look down and coming back up after this large consolidation. If this is going to be the reversal, what I'm going to do is look at the profile as well as, faster time frame. So I'm going to go to an intraday. We're going to use a 30-day range. So we're going to use 30 instead of a 5-minute, an hour chart or 2 hour. We can use a 6 or 4 hour. I want to use 6 to make it more simpler, and at the same time show you the gaps in the overnight. Is this working? Okay, it does look like it is working. We can see from that Friday, February 21st, we sold off. We consolidated a little bit, came down, tried to rally, then we fell off again, consolidated. And this week's range, this is the Sunday range through Friday. If I zoom in here, I want to show you how to use the measured move on the charts to calculate the retracements of a fib. So this is the Friday, which is the 3-7. So I want to take either this high, this is the high for the week, and this is the low for the week. You can see I have an ADX sprint lower because when the RSI fell sharp, the ADX on the DMI, directional momentum indicator, went above 60 and came back down. It's giving me a condition for a lower target. This does not mean that it has to continue lower, but what I wanted to show on this range, in these 5-6 day range, what I wanted to do from the Sunday to the high. So I wanted to show that we were inside this range. We looked below this area on Thursday. We tested the 5509 quarter, and I called this Fibonacci due to the prior week's range. When we reversed back up through it and rallied back up, we had a gap up on. If I take the overnight, this is a gap, and this is the first hour rally up, and we tested above the Thursday high and partial Wednesday, but my concerns are clearing the 5678 in order to continue. Or even if I create a rounded bottom, if this is considered a head and shoulder, what I want to show you is here in an oval. If this is the shoulder, this is the head of it. Oops. And this is the head of it, and we create a shoulder up here somewhere in this range, and we come in a little bit, or we gap up and continue, and we clear the 74. I'm looking to take over these 3 soldiers that took us down to clear this area and reach up here. So what I'll do, I'll duplicate this, duplicate the drawing, and my target would be the first area, this through the 78, through back to the 0 line up here, and 120% back to the upside. Let's just zoom down. I wanted to show you the upside range to the 200% and the lower range in case we do not and end up, I am not biased, and if we end up coming back to the opposite side in this downtrend channel, to the back side of this channel, and the minus 50%, I am not biased. I'm going to trade what the charts offer me on daily basis until we can get a nice position back to the upside. This is in the SPY or the micro ES, the S&P 500 on the measured move. Let's take a look at now the IWM, and I wanted to show the IWM as well on the daily. After these large move down, I can see in this range here on the IWM, we are consolidating in this range. We are trying to look up. So small cap or the value play in small cap are an opportunity in the market in case we clear this level and continue higher. So my Sunday high was here, or you can take the Wednesday high to the Thursday low, and we measure the same distance to the upside or downside to get the levels on the fortune or the small cap or the NASDAQ. So this is the measuring tool to calculate. We're going to go back in history till the 9th. If I go back a little further till beginning of the month or the 21st, I want to show you the levels here, how the Fibonacci works and the extensions on the measured move. This is the breakdown and the gap we were looking at. We measured it here on the daily. We came down and reversed back up. So I am in a downtrend. If I connect these dots here in a linear regression downtrend channel from this point to this point, you can see we just came into that wedge. And if I draw, edit the property, and I make it a solid line, I am looking for that consolidation for the turn and the breakout in the small cap. Let's go back to the daily chart. And what I wanted to show you is go back to daily. Instead of going to the annual, we're going to go to custom. We're going to go to 2024, and I'll use it from 2024 till now on the S&P 500. So you can see the small cap, how I measured it. This was a lot of consolidation in this area. When it looked up, it fell back down. It tried to look in this area where it broke out, rallied up, consolidated, ran up. Then eventually the small cap retraced to this area. So this is a very important area for me in small cap to hold. Let's go take a look at now uh, part of, for example, if I'm going to show you in the semiconductor or the tech sector or consumer products or banks, I want to go to the XLF, the financial sector, to show you where the financial sector, after the, falling for 2 weeks, you can see that consolidation way that 47, we consolidated, and now we're trying to break out of this 5-day range here in XLF. Let's take a look at XLP, and I wanted to show XLP as well. It fell sharply down here, but it consolidated at the 250. This was the breakout rally, come back down, rally, didn't make it to that double top, fell down, tested the backside of this range, and rallied back up to retest the three tops up here, fell back down, but we are holding this big area of consolidation. This is very important in the consumer staples in that sector. And if I take a look at AMD or Intel reported INTC the week before. I'm going to leave this gap here, and we're going to zoom into this area. What I wanted to show you here on the Intel, after the earning report, we had that little gap here, and this is an island reversal breakout on that push. And the CEO, because that was the earning report that was saying, hey, we got a new CEO. And you can see after that moved down sharply on Wednesday, Thursday, Friday, that large gap up, and it's holding the 200 SMA. In case it does clear this area of the 2450, and it does that island, it keeps that island up there, I'm looking for the 2728 in Intel. I know some of the people in our office and some of the traders have got Intel, in their 20s, and they are looking good on that part of the chart. And I want to show you AMD as well, the chip manufacturer, instead of TSM, the semiconductor or NVDA. We can see that we bottomed down here. We've been range bound in the last 10 or 12 days after the scandal took us down. We got those three soldiers going down. If I draw a downtrend channel on the chart from this candle to this candle, I am looking for that linear regression channel, or you can take it this way. You can see that we have a wedge in case it does touch the 18 and it travels, consolidates. I'm looking for the backside of that channel and eventually the 50 SMA on the charts on AMD. And if I take it to the weekly chart, 3-year, I wanted to show you this, that there was actually a channel coming in. We can see it here. It broke through it once, came back, retested this area. This was the consolidation from a couple of years ago. You can see it from the 2024 coming back to it. If this is the weekly chart, these two candles are inside that range. On the daily chart, I am considering AMD for a long position in that area. Let's take a look at which I'm going to do BABA. In this market, BABA has been, because this is part of the international market, as well as we had called BABA down here in this area after that ADX sprint, after coming from that downtrend channel and the breakout and clearing the 94. We consolidated, we rallied, we got that new push, we got the earning report, and we pushed higher. It's been range bound in this consolidation. If there's going to be strength in the market, there's going to be continuation. I'm expecting this is instead of doing an M pattern, down, this is two tops, and a down and continue lower. Look what it did. It held the 18 and continued. If there's any opportunity, then I'm looking for it as a head and shoulder. What you can do is look at it this way. This is the shoulder right here. This is the head of it, and this is the shoulder. If it does this, and this is the shoulder right here. So in case it does that and breaks up, then I would take the distance from here to here, and I would duplicate it to the upside. So what I'll do, I'm going to show you how to do this on a measured move. Just taking a look at this area here to this area, I would duplicate it to the top and looking for the 8200 to the opposite side. And if it comes back to the back side of this channel and it holds this area and reverses, that's another opportunity in BABA. So let's go back. We do have BABA from way down at the $100 and $96 range, but this is a good consolidation of a flag. It looked like an M was going to fail, then it reversed back up. Let's take a look at the NASDAQ micro NQ. I'll finish up right here with the micro NQ, and this is the prior week's range. You can see I'm going to activate it or remove it. We're going to draw the channel one more time to show you the bottoms of it. From this high to this low, when we bottomed out, that was a 14.25 decline, and you can see that reverse back up is an 11.89 in the NASDAQ 100. And if I look at the 4 days range in the S&P or the NASDAQ, I can do monkey bars. I'm going to go to style. I'm going to go to here, and it says monkey bars. You can see it right here, standard from going candles to standard. You can do this. You can see that this is a 30-day 10-day, 30-minute bar, and you can see that big candle that took us down. I'm going to zoom in here to show you this is the value area high, value area low, point of control, value area high, value area low, point of control. The sentiment here was higher on this leg down when we pushed. We consolidated here for 3 days. You can see from high to low, the sentiment was higher, but we had an inside day. This was a sentiment was lower because the time spent was lower. This is the value high, value low in the time spent, point of control, or the time spent was lower. So we fell down, but if I take the high and low, the 50% sentiment was a little bit on the high side. We had an inside day. We looked up, but this 4-day range, in case we do get a breakout and we go higher, I'm looking to clear the time spent and the value area high from 4 days ago at the same time to the point to the time spent to the upper range. So if I zoom in here, this is kind of giving me an overall view of that 4-day consolidation. And what I'm going to do is show you the S&P 500. You can use that, and you can ask us a little bit. I'm going to use I'll use the ES because I have levels on it. But what I wanted to show, this has a lot of measured move. This is the monthly measured move in yellow. But what I want to do is show you the VPOC up here. This is still a virgin control point. When we fell back down, there's another one up here. But in here, we had inside ranges. So we had 2 VPOCs. We got one here, which was never tested in the overnight. So if I zoom in here to here, I'm looking to clear this area here to the 100. But if I zoom in here on the 4-day range, we still have to clear that nice clean top, because here we have a clean top. Here we kind of have a clean top after looking up, but we did not clear the value area high, and this is the value area low. This is the point of control. I know I have the purple a little bit higher because I'm setting up my charts on the volume profile instead of the monkey bars. This is the time spent was lower, but it's inside that 4-day range. Even if I take the high and low and 50% is here, we closed around. If I zoom in here, I'll show you how to look at the close, the high and low. Let's take a look. Where is it? They usually have boxes on them. I can't even see it on the chart. Let's see the style in the style setting. Appearance. I'm just showing you how to use it, which is okay. It's kind of balance. Show the close price at close. Should be there and open. So let's change them to basically, let's do them blue. Let's see if they show up on the charts. Should show in here. Hold on. Let's just do this. This is the open. Where's the close? Come on. Here we go. Here we go. This is the open. Where is the close? Where's my triangle? Should be here. Maybe it's overlapping this price activated. It's at, if that's the point of control, I'll just reset it on the chart. There's your close, guys. This is the close. This is the open. It's in the triangle. There it is. That's why I couldn't see it. So this is basically looking at the point of control. You know, the point of control here, I have it marked up here myself due to the volume profile. So I'm paying attention to this level, point of control. We closed right on that area. You can see it. We just closed right on it, and the close was right there. And point of control. So more importantly, we have two distribution, one here, and the overnight, the time spent was lower, but since the European market, but since we got a wick and reversal back up, I'm looking to see if we can clear this area here in order to continue higher. I hope this video was very helpful. If you have questions, we're here to assist you. Let's just go back. Check us out at Solstice or at Texel. Get in contact with us, and we're here to help. Take care.